Hey guys, welcome back to my channel. Today I'm going to run through how I come up with my position sizing based on what tokens I'm trading and the leverage that I use to trade those tokens. So this is for a day trading strategy. This is not a long-term swing trading strategy. I'm a day trader. I predominantly only trade when I am watching the markets. I don't generally leave my positions unless they're in profit. And so this is why I use higher leverage with smaller position sizing. So if you're interested in day trading and have been looking at day trading and maybe using higher leverages, this is kind of a good rule, or how I've worked it out for my own rules, for you to use higher leverage with smaller position sizes in order to achieve your goals of passing your challenge. So let's get into it. So I've come up with this little sheet to kind of put down in my head of what I kind of do. So this, you can kind of see, we'll start up in this corner. This is your trading calculator. This is going to show you how much your position size should be based on your account. So I've got a 25,000 account. So starting in stage 1, that's 10 days. So to break it down really simply, really easily, the goal is what we want to do is we want to make $250 a day. And if we can make $250 a day for 10 days, we've passed our account. We've passed the first stage of our challenge. So our focus is how do we achieve $250 a day on a $25,000 account. So all of the percentages will work regardless of which size your account is, because it's all based on percentages, not the actual amount. So as you can see, start over here, 25,000, 10 days, profit goal of 2,500. Basically, your max loss every day under the Hero Trader rules is you can lose 5% per day max daily loss, with 3% max loss per every trade. So they're your limits. You also have a 40% upper limit buffet. So you can't make more than 40% of your goal in one trade. However, they're a little bit flexible with this, so that's not a hard fail. If you do go over, they will just have a look and might have to adjust it. So for my challenge, I'm going to use the risk profile of 10 losing positions in a row. So this is very unlikely, even for most people. They don't have that much, but just in case, we're going to say 10%. In the worst case scenario, you have 10 losing trades in a row. And how would you max out your loss on that day with 10 trades? It'd be 0.5% per trade, which gives you your daily max loss. So we're going to use 0.5 as a base for our max loss for each trade. And then basically what we've got to do is figure out the leverage. So you'll have different levels of leverage based on the volatility of the coin that you're trading. So a lot of people will try and just use 100x on each coin. And that's going to give you a lot of volatility, and it's not going to be able to work for all coins because some coins move drastically more than other coins. So you're going to base your leverage on the volatility of that coin. But how do we figure that out? So basically what I've done is I've broken down the tokens into the ADR, which is the average daily range. So all coins, and it will vary as well, they do go up and down, but in general you can break down your coins into, I've broken them down to 5 different levels. Starting with Bitcoin, which really doesn't move more than 3 or 4% a day, 5% is a big day for Bitcoin. And then we've got the next level down, which is your major tokens. This is Solana, Ethereum, Matic, all of those big guys. They also don't tend to move too crazily, so I put them in the next level, which is between 5 and 7 ADR. The next one is your other major, maybe the top 50. These are your minor alts that they've been around for a while. They're not too hectic. I've put them in that bracket in the middle. And then you've got your really small alts. So these are alts, they're trading on Bybit, they've been around for a little bit, so they're gonna get a bit more hectic movement. And then the bottom is your meme coins. So these are usually brand new coins, they don't have a lot of history, and they're extremely volatile. And so they move up and down like crazy every day. So they're gonna be in the bottom level. And in general, Bybit already does this for you. So you'll see these leverage amounts on coins, and they're basically already broken down into these levels for you. So when you go into Bybit and check your max leverage, you'll generally find that they have done this for you, although you can double check, because sometimes they will fluctuate within the sections. Sometimes they are moving a lot more. If they're like going through a run, they'll have a much higher ADR than normal, and so then you maybe want to decrease the amount of leverage that you're using because they are just moving so much in that particular section. So we're going to have a look at these in Bybit right now, and I can kind of show you how it all works. So here we are inside of Bybit. So how we adjust our leverage, if this is your first time coming in, what you want to do is you want to make sure you're in derivatives, and then we're going to go up here and we're going to choose, I choose cross. You can use isolated, but it does limit the amount of leverage that you can use on your positions. So in general, because I don't really leave open positions and I'm always watching my trades, I don't mind using cross. If you are more of a swing trader and then end up leaving trades open, it might be safer for you to use isolated. In the case of a volatile market move, cross can actually wipe out your entire account because everything is connected. So if you are leaving longer term positions, swing positions, then it would be maybe smarter for you to use isolated, but that's a different trading method to what I'm doing right now. The method that I'm using right now is for short-term day trading. So these are trades that are only going to be between minutes and hours, and then are only usually going to be watched during one day, or maybe even just like over 2 days if they're just a little bit longer. So up here, I've got cross, and then I've got 50x because right now I'm trading Zeta. So Zeta is kind of in that middle position. It's been around for a little bit. It's got a little bit of price history. It has a pretty volatile ADR, but it will still work in this algorithm. So basically when we're placing our position, we're going to use 50x on this because of its ADR, and then I'm going to use, according to my calculations, I'm going to use 6200, 500 on 50x, and then we always have to place a stop loss before we place the trade. You don't want to be, especially, one of the rules is if it's over 25x on the Hero Trader rules, you must put the stop loss in before you even put the trade in, otherwise that can lead to you failing your account. So just in general, always put your stop loss in before you place your trade, and then you're just going to know exactly what your loss is anyway. So we're going long here, and then what we're going to do is it's 44%, no, it's 94% is what the algorithm, my calculations say, because that's going to give me my $120 loss. And so I've got here 94 confirm, and then what I'm going to do is buy, and then it's going to come up here with your confirmation screen just to make sure everything is correct, and then you're going to go yes, and then we're going to confirm. Awesome. And so you can see here, because the leverage is so high, and because basically the ADR is so high, it's not very far away, even at 94%. Like, that's how volatile these movements are. Is this is 100% loss. I'm on a 50x. That's like, it could literally happen in minutes. So this high leverage trading style is for day trades only. So you really want to make sure you're sniping those entries, and these are for short-term entries. So you can see here, that is like the average gap that you're going to get. And if we'd got in down here, which is probably where I probably would have been triggered, that is actually quite a good stop. If I'd gotten in here, that would be pretty good stop loss. So I also put in some other trades before just to kind of show you the different ratios and what different types of coins. So you've got something like Nero, which is like a very new coin, highly volatile, and it only comes up to a 12.5x. So if you click on here, Bybit only gives you the option of 12.5%. So that's because it just knows it's super volatile, it's brand new. It actually comes with a warning when you're about to sign up. I'm going to show you this too. So this is actually the risk agreement when you go into these super new coins that you have to sign in order to be able to trade them, because they're that new and that volatile. But as you can see here with those calculations, you're still going to get a nice little amount of stop loss there for a snipe trade. So again, if you'd gotten in down here with this W formation and gotten in over in this area here, it still would have provided a nice enough stop loss for you to be trading with this leverage and the amount of money. So for example, this trade with Nero, we've got $4,218, and then for its stop loss, it's 32.8. So we'll go back to the other spreadsheet and I'll show you those numbers and how I got those numbers. So basically, when you're trying to work out position size, there's a few things that you need to take into consideration. So if we start with the calculator here, you're going to have the different levels of leverage depending on the token based on the volatility. And then on average, like even if it moves 5 to 7% a day, you're not always going to catch that whole move. So for an example, we're going to catch half a move for the day. So if you got out half a move of that one day just on average. So we're going to return 200%. That's kind of our goal. So basically, like if you get Bitcoin, if you get 2% move on Bitcoin, you get a 200%, we're going to return $250 based on our risk. But they're all going to be slightly different based on the leverage and then the actual volatility. So what I've done here is to try and give it the $250 return on average. Your position size will be slightly larger for the lower leverage, but still taking into consideration the volatility. So basically here for our memes, which could be moving like 15% a day, even because we're maxing out at 12.5 and catch half that move on that, you're still only getting 75% if you're only using that formula. So what we want to do is we want to make our position sizes a little bit bigger to take into that consideration, but we're still going to use the same amount of risk. So our risk doesn't change, so we're only ever risking the $125, but we're going to make our position size a little bit bigger in order to achieve the $250 goal. So if you can see over here, we've got, so say we've got our Nero trade, it's 12.5x max, because that's all that Bybit will let you do. In order to kind of achieve that same goal, we want to make the position 1.4% of your 25K in this example. But we also need to take into consideration fees. So fees can add up, especially if you're using higher position sizes. So for Bybit, it's 0.06 per trade in and out. So that makes it 0.12 for the complete trade. So you need to make sure that you're taking into consideration fees on all of your trades, because if you don't, you can be very surprised when you're going in and out and you don't achieve your return that you were thinking you were going to get. So once we've got our max loss here, which is our fees plus risk, it gives us 36%. So for this position size and this token, we're going to risk a maximum of 36%. But because it does only move, you've only got a 12.5x on there, it's going to kind of balance out your volatility with your return. And this is changing for all of these based on your goal of the amount of leverage and the position size. So we're going for that total return of 250. So for 25x, our total position size is going to be a little bit bigger. And then we've got 60% for the max risk. And then for these ones, in your average, it's going to be a 50x leverage. But you're going to have like almost 100% risk, because that volatility, like again, 1% move with a 50x means 2% and you're liquidated. So you want to have that little bit of flexibility because they do move so much. So you'll see in general, you need less stop loss with a smaller leverage, even though you've technically got a higher percentage of capital because of the volatility and the percentage of leverage. So over here you can see your Bitcoin trade, which is the only coin I would trade with 100x, because it really doesn't move that much. Very rare for Bitcoin to kind of have massive rally days. When it does, it goes, but in general it does not move very much. So it's the only one that I'd recommend using 100x. And so you can see your max stop here is a little bit less because the volatility is just that much lower. What I've actually found is that the best risk to return is going to be something in your top 20 using a 75x. So according to these numbers, you've got the biggest stop with the lowest amount at risk to achieve more profit. So basically you can see up here, you got the average return just in general is like 225%, because you've got a good amount of volatility, you've got a good amount of leverage, and then you don't have to risk as much. So if you're trading something like Solana, it's a good track history, it moves really nicely, it moves a lot of time in conjunction with Bitcoin, and still achieve really without having to trade meme coins on super high leverage to get the same results. Awesome, so that's how I've worked out how to use leverage and position sizing in order to make an average of $250 per trade, depending on, again, volatility and leverage. So it really can be as simple as those 10 trades, because you do need to show relative position size and consistency over time. With the Hero Trader rules, you don't want to just make all of your profit on one trade. They want to see consistency. So using something like this is that you can keep your position sizes relatively consistent, but more so you can keep your losses consistent and contained. So this way you would have to have more than 10 trades go bad in a row in a day in order to hit your max daily loss. So yeah, hopefully this is helpful for you guys, and I'm going to add this link to my Telegram. So if you want to follow me, it's at vtrading on Telegram and also Twitter, and if you have any questions, I can chat to you there. So see you later.